Picture this. You just got that big promotion. More money, right? So you upgrade the car, get a bigger mortgage, and somehow you're still living paycheck to paycheck. If that sounds familiar, you're stuck in what Robert Kiyosaki calls the rat race. I was there too. For years, I chased the bigger salary, only to find the finish line kept moving. I remember the panic attack I had looking at my massive student loan statement. I felt totally controlled by my income. But what if the whole rule book you were given about money was wrong? This book, Rich Dad, Poor Dad, is that new rule book. It's the story of two fathers and two radically different paths to wealth. To show you how real this is, meet Sarah. She's smart, works hard, and just got a raise. Yet every single month, she feels the squeeze of debt and the constant pull of more spending. We're going to show you the number one mindset shift that took Sarah from financial stress to true freedom. Let's dive in. The core revelation: the rich don't work for money. Their money works for them. Kiyosaki's poor dad, the highly educated professor, valued job security and a paycheck. His rich dad, the entrepreneur, valued learning how money works. I used to think of 401k was the whole plan. Rich Dad taught 9-year-old Robert to work for experience and lessons, not just the wage. This lesson is about shifting your focus from the income statement to the balance sheet. This is the heart of the book. An asset puts money in your pocket. A liability takes money out of your pocket. Most people, like Poor Dad, buy liabilities they think are assets. A big house, a new car. They look good, but they drain cash flow. When I bought my first dream car on finance, I quickly realized I'd bought a beautiful, shiny liability. Poor Dad earned money, paid taxes, and then spent what was left. Rich Dad taught the importance of corporations. For the rich, the cash flow is earn, spend via the corporation, then pay taxes. They use the tax code to their advantage. It's not about avoiding taxes. It's about operating smart, a privilege traditionally reserved for businesses, not employees. Financial IQ is more than just reading a bank statement. It's about understanding accounting, investing, markets, and the law. Rich Dad believed that if you don't know the game, you're playing with loaded dice. Don't be a passive investor. When I started researching index funds versus individual stocks, I realized how little my college education had taught me about real wealth building. Education is your most valuable asset. Poor Dad told Robert to go to school, get good grades, and get a safe job. Rich Dad said, mind your own business. Your job is a means to an end. Your business is your asset column. Kiyosaki means you must focus on building your own assets, real estate, stocks, intellectual property, outside of your employment. Don't let your career become your entire financial identity. The difference between a winner and a loser is how they manage fear. Fear of losing money keeps most people playing it safe, which is the most dangerous risk of all. When I hesitated on my first real estate investment, Rich Dad's voice echoed. Intelligence solves problems and produces money. Winners are not afraid of losing. Failure inspires them. This is the game changer for career choices. Don't choose a job for the salary. Choose it for the skills. Rich Dad encouraged learning a little about a lot. Accounting, marketing, law, communication. These soft skills are what allow you to manage and grow assets. The employee asks, how much? The future Rich Dad asks, what will I learn? So let's bring it all back. Rich Dad, Poor Dad isn't just about money. It's about control. It's about leaving the work for money mindset and embracing the money works for me reality. The key takeaway? Stop chasing the salary and start building the asset column. That little panic attack I had over my loan statement, it forced me to see my financial world differently. Just like Kiyosaki's mentor changed his. Now let's check back on Sarah. She shifted her focus, cut the unnecessary liabilities, paid herself first, and started investing in a small rental property, her first true asset. Her stress is replaced with a clear, focused determination. she's left the rat race. If you want to escape the rat race, start by hitting that like button and subscribing to TideForest for more financial freedom blueprints. What's the first asset you're going to buy? Let me know in the comments below. Thank you for watching. And remember, your mind is your most valuable asset. Train it well.